Welcome to the Business Finance Bulletin, episode 222. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, business borrowing apathy, business confidence continues to fall, and more small businesses accessing equity investment. Let's start this week's bulletin with what appears to be a common theme emerging over the last couple of bulletins, and that is business owners' lack of appetite when it comes to borrowing money. A new survey's come out from the British Chamber of Commerce in conjunction with Lloyds Bank, and they've spoken to 1,000 business owners about their appetite to borrow money. Now, this survey has found that 56% of businesses said that they have not borrowed anything over the last 12 months. Now, when you break that down to smaller businesses, and that's defined as businesses employing between 1 and 9 employees, well, that lack of appetite jumps to 63% of businesses saying that they've not borrowed in the previous 12 months. But what about those businesses that have borrowed money? What have they been using it for? Well, the survey found that 49% of them said they borrowed money purely to support cash flow. In other words, to fill cash flow gaps within the business, perhaps to bridge late payment issues that they're facing. Now, okay, so they're still borrowing money, but the problem is, of course, it doesn't move a business forward. It just keeps them afloat. It keeps the wheels on the bus, as it were. There's no long-term investment. But of those businesses that said they have borrowed money for investment, it's really for much smaller projects, investing in marketing plans, training, getting new staff in, and investing in IT. There are no big investment going on. So we can see there's a little bit of a worry for the economy. If people aren't really in forward investing, then that doesn't augur well for the future. Well, unfortunately, continuing the doom and gloom, let's look at some latest business confidence figures. The latest monthly report has come out from Lloyds Bank as part of their monthly Business Barometer index. And they've looked at figures at the end of May which reveal that businesses have an increasing lack of confidence in the economy. And their average confidence index has fallen from April at 35% down to 29%. So that's a big drop in 1 month. What's driving this? Well, business owners seemingly have a lack of optimism when it comes to the performance of the UK economy, both as it stands today and looking ahead for the rest of the year as well. So that confidence level, as we saw in the previous segment, is really holding back investment. And in fact, those businesses that Lloyd spoke to also said that they're really thinking heavily about whether they should be investing in new staff. So all of this lack of confidence is beginning to have a trickle-down effect into the economy. However, one bit of good news, there is an increase in optimism amongst manufacturers and construction companies in May. Now, manufacturing companies, I get, increasing confidence in the construction sector. So that's a bit of a surprise, given that that sector has been struggling during the first part of 2018, especially on the knock-on effect from the Carillion collapse. So there we are, more evidence coming out that business owners are not feeling as confident as they should. What's that down to? Well, perhaps we do need a little bit of certainty as regards Brexit as to what the UK economy is going to look forward to in 2019 onwards. I'm sure you agree it's time we finish this bulletin on a high note. Now, one source of finance, of course, for growing limited companies is to sell shares in your business, selling equity in exchange for cash. Well, the British Business Bank has just released its 4th annual Small Business Equity Tracker report, and that reveals that in 2017 there was an 89% increase in the amount of money raised via businesses selling shares. In terms of the total amount raised, that amounted to £5.9 billion. What about number of deals? Well, that increased by 6% on 2016. What about the deal size? Well, this is interesting. There's been a significant jump there. In 2013, the average deal amounted to £2.2 million. In 2017, that had jumped to £4.9 million. So we can see business owners are being a lot more ambitious when it comes to raising money. So which type of businesses are raising? Well, obviously technology and intellectual property are really leading the pack. And also at what stage? Well, 47%, so nearly half of the money raised, were for seed investment. This is very early stage. Businesses who've got an idea of what they want to do, but no real formulated plan, just an idea of what they think they can achieve. So we can see there's a lot of investor demand out there. So if you've got a great idea in your startup or even an established business, don't discount the option of selling shares in your business. There's clearly a lot of money out there if you're prepared to look for it. Well, that's it for another bulletin. Thanks very much for being with me, and as ever, I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you next time. And in the meantime, have a great, successful and profitable week.